Hey everybody, Chuck Barone here. Monday, January the 9th, 2023. We're off and running. A new year, but the same old story, the same old song and dance, right guys? I mean, hoping for a little more normal. And I guess, the definition of normal is changeable, right? Everybody sees things normal a little bit different, but we just have so many things going on in this country. So many things happening, and people are just distracted and just behaving so silly. Anyway, moving on to the markets today. It was an interesting day in the markets today. Really not a lot happening, truthfully. So the stock market comes out. It's basically a mixed day today with the Dow and S&P down very small. The NASDAQ squeezes out a very small gain. Not a lot of news in the market. We got some stuff coming up later this week that'll drive these prices a little bit more than today's stuff. They're just not, today was basically fears, interest rate worries. What's the Fed going to do? What's CPI going to look like later this week? It's just the same old story right now in the market. The market doesn't have much direction. It's totally day-to-day data-driven. The news of the day is what's driving this market. There just isn't a lot of okay, we're in the middle of a boom or in the middle of a bust, and there's a big trend. I mean, obviously, stock prices, down pretty dramatically last year. Hopefully this year is going to be a little better year for the markets. The bond market, though, unlike our friends in the stocks, the bond market rallied, rocking and rolling. I mean, this market, so the 10-year today, down another 5 basis points, settling at 3.51. Well, it wasn't that very much long ago. The 10-year was sitting at over 4%. And I was honestly at that point believing we would not see it come down below that. Here we are, just a very short time, not within weeks, within a couple of weeks, at 3.5. This is not the way the bond market is supposed to be functioning. It's fun to watch, but it's just crazy, guys, crazy. You got the 2-year today also down 5 basis points, sitting at 4.21%. So you got 70 basis point inversion. Rates coming down uniformly, which is kind of surprising. Even mortgage rates down. We were up over 7%. Today, look at the rate sheet between 6.25 and 6 3/8. So, Fed raising rates. Market apparently the only rate that's really the Fed's affecting strongly right now is that overnight rate. Markets don't want 7s. Let's see how it works with another rate looming at the end of this month. Now the dollar today was down again. 103.19 on the index, down 2 points in just within the past week or so. It was just rallied back up over 105, and now boom, right back down to 103. These markets just can't make up their mind which way they want to go right now. And surprisingly, with the dollar down, I thought metals would have a monster day today. No. Gold actually had a gain, up $5, sitting at $1,870 per ounce, and rocking and rolling, man. That's a pretty quick $100 gain per ounce for gold. And silver actually down today 23 cents, sitting at, last I looked, $23.59 per ounce. I would have liked to have seen silver get above and stay above 24 on its way to 25, but I think metals want to rise. And, there's been some profit in silver, I guess, maybe people taking profit today. I'm surprised that the metals market didn't rally more than it did. But, it looks like blue skies for gold and silver coming up. Oil today was also up $1.06, still only at $74.83. I really guess I shouldn't say only, but for the longest time it's been well above $80. Now coming down, I guess a little bit warmer winter than they anticipated, driving prices, concerns about demand. So oil, $74.83 for a barrel of West Texas Intermediate. And finally, wrapping up the markets, Bitcoin today, leading cryptos, up $249, 17,224. Interesting because Peter Schiff, who I respect, was one of the few guys who got the 2008 crisis correct. is talking about the death of cryptos. Says, this is just a dream. Interesting, because this guy is usually right. Usually, especially on big picks like this, where he's actually like making these bold statements. So it's going to be interesting to see where things go with cryptos down the road. I was been warning everybody of you in this show to be very cautious with cryptos. I just don't like this whole FTX thing and the trial and all the stuff that's going to come out about the company and the way they ran it. It's going to be a reflection on the entire industry. I understand the good things you're going to get with crypto. I do. I understand. I guess I'm not an expert by any means, but I understand the idea. And I just don't think at the end of all of this, it's going to be the same idea. Because you're going to have the government involved in this. You're going to have much, much, much more regulation on it. And I don't see how that's good over the long term for cryptos. Stuff you guys need to know, interesting stuff this week. Well, tomorrow we'll get wholesale inventories, which is important. We want to make sure, we would like to see inventories building up a little bit, which causes prices to come down. So that's why this one is important on tomorrow's. On Wednesday, we'll get the Mortgage Bankers Index. That one's important because we're going to see the continuing decline in real estate. We'll see what loans are looking like, the volume of loans, average loan size, and a lot of interesting information on Wednesday. Thursday is the big day, of course. Thursday, we're going to get CPI numbers. They're expected to be at 6.6 on the top line, 5.7 core. So they're expecting the inflation numbers to continue declining. 6.6, not a great number, but way down from the peak at 9 in the 9s, coming down steadily. We'll see how accurate these are. These numbers actually narrowing from their preferred indexes, which is kind of different. I'm surprised there. And also on Thursday, we'll get the initial jobless claims numbers, expected to be 210,000, up from 204. If you get a shock there, or on the CPI, that is going to be putting big pressure on the Federal Reserve to continue raising rates, to continue to keep rates high. Today we had Mary Daly. Yay, Fed chair. Fed Bank president. Now trying to spook the market. These Fed people, I don't even know why they insist on bringing these people out like this. So now she's talking that the Fed is unsure whether they could raise a quarter or even a half coming up on February 1st at the end of their next open market committee meeting. Well, now that's got to be a little bit of a shock to the market because everybody's expecting a quarter. What good does that do the market coming out and saying that? Housing prices continue to go down. Housing sales continue to decline. The amount of sales, at least I'm watching Vegas very closely. I think we're kind of a bellwether. As it stands right now, sales are down about between 30 and 35%. Prices down now over $60,000, more than 15% from their peak, down around 420,000 from 482. Real estate. Now, the interesting thing is rates coming down a little bit as well. So you have prices. Been saying to you guys listening, one of two things are going to happen. Either rates have to come down to support prices, or prices have to come down to support rates. But what we're getting is a little bit of both. They're both coming down. It's going to be interesting to see where this settles. And I've been telling you guys, I think we'll end up with a median price of around $350 here in Vegas. People think I'm crazy that there's no way it can go down that much. We'll see whether I'm right or wrong. Interesting stuff today. Morgan Stanley coming out says the S&P could very well decline another 22% from where we are. Well, geez, Morgan Stanley, thanks. I think that this has just been one company after another coming out warning about terrible year in the market. These are the same people who said we were going to have a great year last year. I don't know. I think that the more and more I hear all these Wall Street knuckleheads coming out talking about these big losses everybody's going to have this year, the more confident I am that it probably won't be so bad. When everybody's heading in one way, it tends to be in the wrong direction, guys. And these guys are pretty much unanimous that this is not going to be a great year for the markets. Could be a pretty painful year. 22% would be a pretty big loss, considering the losses we've had this year. So we'll see who's right on all of this stuff. We had an interesting thing come out today, the Fed survey, the New York Fed, they do this monthly survey, interesting stuff. They were saying that inflation expectations are continuing to fall with the people they're surveying. They said spending will probably also fall pretty dramatically. What was the word they used? Spending will fall notably, or will notably fall. So apparently the people they're surveying are talking about how they're not going to be spending as much or going to be tightening their belts. And the same survey people say they expect their incomes will continue to rise. Well, that's interesting, because typically when people's incomes rise, their spending rises along with it. So I don't know, does that mean people are planning to save a little more money? I didn't really get into all of the details of it. I finished reading it up after the show here today. What I thought was interesting was the Fed survey says people expect the inflation number to be 5% a year from now, which is down from 5.2% from last month's survey, and the lowest actually the survey has had since July of 2021. So they're expecting that people's inflation expectations will continue to fall. They have been falling, which is actually a good thing, because you do not want inflation expectations to become embedded, because it changes the way society behaves. So the two big fears they have is embedded expectations and this wage price spiral. I think they're getting a handle on both of those things. I got to say, I hate to be the guy who's actually saying the government is doing a good job, but they kind of, even though they're the ones who got us in this mess, so they should be the ones cleaning it up. It seems like they're handling things kind of the way they should be right now. Things are orderly. We'll see. It's going to be a fascinating week, guys, and of course we're going to be here every day to keep you guys posted. The information I'm going to be a little more selective about the information I put out every day. I want to give you guys information that's more useful to you in your investing, in your trading if you're a trader. I told you we have some plans for the station this year, the channel. We're going to do some different things. This is just one of them. We'll be back again tomorrow to bring you guys the news you need. We appreciate your support as always. If you like what you're hearing, hit the like button. Ask me your questions in the comment section. Make sure to check your subscription, your notifications. And until we talk again tomorrow, guys, take care. Thanks.